Hey everyone. All right. We are back for Tuesday, April 22nd, the trade recap for the day. And we're just going to dive right into it. All right. Today, yes, if you read the title, that's right. I had another loser on a winning trade. Except, so there's two things I want to point out on this trade today. It wasn't bad what I did, but also I shouldn't have. Keep that in mind. All right. So it wasn't bad because the market did what it shouldn't have done, which caused me the loss. But it was partially my fault because once again, just like last week, one day where I didn't quite pay attention to my stop size as much as I should. Or actually last week I didn't at all. And today I did, but then I adjusted my contracts, readjusted it, and forgot to readjust again. So yeah. So before I dive right in to everything, this month has been a little up and down for me. I mean, my win rate's right at 50%. As you know, I take one trade a day. So I've taken 10 total trades and my win rate is 50%. So, you know, I'm doing a little bit up and down right now this month. A couple of days, like today and the other day, I had two mess ups where the trade itself won. So that's kind of what I keep in mind, right? So like I want to just real quick say this before I get into the recap is we know the mental game is so crucial, right? So it's like, it's one of the most important things, in my opinion. It's the most important thing when it comes to trading, the mental game. We can very easily spiral out of control. We can very easily do things we normally don't do. We can very easily get discouraged, want to quit, say, what I'm doing is not working. I need to change things. Not necessarily. You can pump the brakes as long as now, if you're in the phase where you're still, trying to figure out your strategy, things like that. Okay. Yeah. Maybe you need to make some adjustments. Maybe you do need to figure out some more things. But if you've already got your strategy set, like it's down, you know what you're doing every day. And basically the only thing you're just going through your money management and all that. You have to zoom out when you take losses. And by that, I always want to look at the silver lining. I want to find the positive somewhere. Now, I always want to figure out what went wrong on the trade every single day. I do always want to do that. Don't get me wrong. Chart review is crucial. You want to do that every single day. You can't just say, that was a losing trade. You can't do that, in my opinion. You can't do that. You have to go back and figure out, was it me? Was it the market? Or was it both? All right. So aside from the trade, if I can't find something wrong with the trade, so I do want to also figure out, like I said, is it me, the market, or both? Do I need to make adjustments? But the other thing is, I'm more focused at this point on, was my framework correct? Because I don't always win every trade, right? But I do want to make sure that my framework is correct and my market analysis was correct. And what I mean by that is, before I trade, and how I do just on all these trade recaps where I do my top-down analysis, and what I do is I want to, before I trade every day, I want to figure out where I think the market's going or where it should go, and I want to anticipate that. And if that's correct, then I'm happy, even if I took a loss, because my analysis was right, my bias was right, and it just so happens I took a loss. Maybe the market pulled back further than what I thought it would, before, it went. Maybe there's little things. There's little things and it caused me to get a loss. And I'm okay with that. I'm 100% okay with that. So just kind of wanted to say that real quick. And then of course I don't get caught up in the day to day. I don't care if I lose each day, but I want to see, what did I do for the week? Was it 3 days I lost in a row? Did I lose 3 out of 5? Did I lose, 4 out of 5? Like, I got to figure out what's going on. And I know, based on my trading history of over a year of data, year and a half of data of doing this, right? I know my patterns. Typically, if I have 3 losing days in a row, something's wrong with me usually. And I rarely get back-to-back losing days, but it happens. And usually I'll get, like, if I'm having a tough time, I'll have like a winner, loser, maybe 2 back-to-back and then a winner. And that's why my money management is so important, because 1 winner for me equals 2 losing days. So that's why I never really fall behind as long as I'm sticking to my money management. Because if I take a loss like I did today, 1 winner will make that loss up and about half to another, like, to double. So, for example, if I lost $5,000 today, 1 winner will make that 5 back and pay me another 5. That's basically what I'm trying to say. It'll make that typically back times 1.5 to 2%, or 2 times. So now let's dive into the charts. I just had to get that out of the way because, as you know, my total focus is discipline psychology. And the main reason why that's my total focus is because I struggled with it for 3.5 years before I started finding some type of consistency. And now I've been trading for 5 years now, a little over 5 years. And I can't tell you in these 5 years how many people I know that are no longer trading. And it sucks because these people, I know they knew, like, they would be good traders. They just couldn't master this part. And, great people, they had it down. They knew how to trade, but this defeated them. So, all right. So let's dive in here. We have the weekly chart. Not much change because it's Tuesday. Usually our changes are going to, happen, or what we're looking at is going to happen in the later half of the week or on Monday. So not much is here. I wouldn't expect much, especially with this candle here, this big, like, expanding candle there. So we're just going to hop right into the daily chart. So this is where I was looking at for the day. All right. I've been mentioning all this area for a while. What we have here is, because price was down here. This is today, right? So price was down lower. And what I was looking at immediately is this volume imbalance. Right here. We have this candle. Let me zoom way into here. A little bitty body. You can, like, barely see it. Look at that. I got to zoom way in for you to see this little body. Little body, right? Very little, but there is a gap between that body and this body. So that's a volume imbalance, okay? So what I was looking at is, okay, we're still in a bearish trend. If you look at the trend, because here's the trend. We never took, like, with this run up, we never really took a swing, because here's a swing level here that we'd have a market structure shift to look bullish. We never quite took that. So, and then after we had that run up, we kind of came back down and we took this swing right here on Monday. So we took that swing low. So, okay, we're still kind of like, we're still in this bearish scenario, but we have this volume imbalance right here. And if I look down, like, where could price draw to? There's not really, like, we have this swing down here, but it's quite a ways down, right? So it's like way down here. So do I expect price to just run straight down there? Not really. We know it can happen, but not really, because we have this volume imbalance that was untouched before today. And as you know, I've said this many times, price typically is not going to run too far away from a volume balance before it comes up and touches it. So this one up here has actually, price has ran away from it for a few days, right? So we had this one create, then we had 1, 2, 3 days now where price has not touched that. Okay. So this one, what I was looking at is, oh, well, price might come up into this volume imbalance, therefore creating a swing here. So that way, if it does come back down, well, there's now a target swing here that there could be some sell side liquidity being engineered under. So price did come up, and you can see it closed above this volume imbalance. So what I would be looking for going forward the rest of this week, do we continue to push up towards this volume imbalance? And if we do, this area is where I'm going to be looking to see if we go ahead and attack those relatively equal highs right there. So I won't look at this part until we get to this volume imbalance. So, but that doesn't mean we're going to do that because we closed right up here. So tomorrow I'll be looking to see, kind of in this area. Tomorrow's going to be kind of crucial, in my opinion, Wednesday, of do we continue up to there, or are we going to continue down and try to take out this swing to remain bearish? So that's going to be interesting for me to see. And basically what I'll look for is just like what I look for each day. Because tomorrow I'll probably have a little more of a neutral bias for the day, I will wait for the manipulation first. So if it's going to be bullish, of course, I'll wait for the manipulation down and then look for it up. So if we open and go down first, then I would likely to believe we're manipulating down and we're going to go expand to the long side. However, if we open and we just go, up, then I would be waiting to see if we're just going to go up somewhere and then expand up and manipulate and then expand to the downside. However, if we do open and just go up, I don't think we stop anywhere in this middle. Because why would we, right? I think if we open and just go up, we're just going to likely hit that right there. And at that point, that's when I'm going to wait to see what we do in that area. So tomorrow is going to be a little bit of a waiting, and let's see where price opens and manipulates. I'll be looking for the open and the manipulation of price tomorrow. All right, so that was what I was looking at on the daily chart here. And mainly because price was down here, I was really bullish today, really bullish. I thought price was going to go up, and I wasn't really looking for much of a pullback. So what I did was I dropped time frames to see if the lower time frames agree or not. So remember, we still have this huge move up with this huge gap on basically every time frame right here. And we left this portion, unbalanced. We left this portion remaining from this low to here. So literally this is what's remaining. Okay. But price, the 4 hour, and I wanted to see what was happening on the 4 hour. So on the 4 hour here, we had this inversion right here. Inversion happened basically overnight. Okay. And then kept pushing up. And then what do you have here? We have that inversion, and then we have a 4 hour fair value gap. Yeah. Right? So, and then we actually had another inversion here, but that hadn't happened yet when I was trading. So I was mainly looking, so had this one happened? 6, 10, yeah. Well, that hadn't closed yet, but oh no, I was looking at it as a potential fair value gap, but that hadn't closed yet. But mainly what I was looking at was this inversion. I was like, well, we have an inversion. And at the time, this was about to become an inversion also. So I'm like, okay, I was bullish on the daily. The 4 hour is showing bullish where potentially bullish because it's creating inversions here. So now I'm like, all right, let's see. That's kind of good looking sign there. Let's drop to the 1 hour and see if we're aligning as well. So same thing, 1 hour. What do we have here? We have a little inversion here. And then we had an inversion here, right? Go up, inversion, inversion. Okay, so it's like, all right, so we are creating inversions. At the same time, price going up is creating fresh 1 hour fair value gaps. And look what happens. Creates fair value gap, trades right into it, takes the high with, guess what? Another fair value gap. Trades right back to consequent encroachment. And then guess what? Takes the high with, you got it, another fair value gap. So here, pulled back, look at the bodies, right to consequent encroachment. I'm like, at the open, I have no reason to believe price is going to pull back down into here, really. Like, I don't think we're going to open, pull back here, and then go up. We're probably going to open, maybe if there's a lower time frame, fair value gap or something, maybe we pull back into that and have a very small manipulation before we just distribute and run up. Because this bar didn't close till 10 or after 10. So we didn't have this gap, fair value gap yet, but I saw it being created. So I was like, well, now we have this swing high right here and price taking that. And look how it pulled right back to that. Price taking that with a potential displacement of a fair value gap there. So I'm like, you know what? Well, yeah, we're likely, market just gapped up. We're likely to not pull back. So now let's go down to the 15-minute and see if that aligns. So here's the 15-minute. Same thing. Came down, took this swing high with displacement. Now we have a market structure shift on the 15-minute, pulled back, same thing, right? So I was like, well, we're going up. But from here, we have this 15-minute fair value gap right here. Oops. Right here. And I point that out because this is the 9:30 opening bar. Remember, there's always some sort of manipulation. If you're going long, you should manipulate down some sort. It doesn't have to be a ton. And then take off up, right? That's what you're looking for. So right here, we opened. We came right down into this 15-minute fair value gap. And that was it. That was all she wrote. All right, so I saw this 15-minute fair value gap. I had this low, kind of like a sell side liquidity. I had this high on the 1 hour, which it's irrelevant, as kind of a buy side liquidity. Oh, actually, it was this one here. So I was like, yeah, I don't think we're going to go and sweep one side and take the other, to be honest. I really didn't see that happening. So I was just looking for some type of internal range liquidity, fair value gap, somewhere to pull back into, and then for it to go. So that's literally what happened. Now let's jump over to my trading chart here that I traded on. So I can go over the trade. So here we go. We open here. And as you can see, right here was the open. And we shot right here into this 15-minute fair value gap. And look what happened here. Look at the bodies. Look at the wicks. Look at the midpoint, consequent encroachment right there. Right? Telltale sign. That's all we're going to do. Pulled up, came back down, and look at this wick right here. Look at this wick. Pull back, came right down into this wick, went up. I was looking at this as a potential order block as well, but didn't really matter. So it ran up, and as it was running up, I didn't really have, like, it didn't give me an entry, right? So it didn't really give me an entry. And I was waiting to see if it would, here, let me do this. Create this 15-minute. So right here is a 15-minute fair value gap. this shaded one right here, if you can see that. All right. But that hadn't been created yet until right there's when it was created. So these 2 points right there and right there. So this run up, there wasn't anywhere for me to enter a trade. Like there was really nothing. There was this first presented. There we go. Little first presented fair value gap right here. And it did shoot down. Could have been an entry. I just didn't, it was early. It was 9:39. I wait till 9:50. It wasn't really an entry for me. That's just not an entry I take. So basically I had to wait. And what I wanted to wait for is for price to go up and create this 15-minute fair value gap. And then I wanted price to pull into it. And then I would look for a long, either for it to create a fresh fair value gap or something. And I'd go long and take it up to, here's that volume imbalance. And there's actually a new week opening gap right here, the low one right there. So price was coming up, pulled back, and it pulled back. There's a 5-minute fair value gap right here. That's this other shade. And as you can see, it never hit this 15-minute one. It got 1 point away right here from hitting this 15-minute one. And then ran up and left this 1 minute fair value gap right here. But you can see, so this was the best entry of the day. This fair value gap that went up right here. Right here, this one. If you can see it, this 1 minute. It created an inversion, right? But then it hit this 5-minute fair value gap, which is this shade right here, this larger shade. It's a 5-minute one. And it hit that one. And then it came up. And then look right here. As soon as price closed right here, this 1 minute fair value gap becomes reclaimed. It's now a reclaimed fair value gap. And then not only that, it left a brand new fair value gap right here. So when this closed, that could have been an entry right there on that reclaimed fair value gap. That could have been an entry right here to target right there. I would have been targeting literally this level right there. As you can see, it came really close and actually did not hit it. So, but anyways, that's not a trade I take either. So I didn't take it. So then came down and I was looking for some PD arrays, some fair value gaps, something. Well, I only take fair value gaps. I was looking for a fair value gap to trade, to get into before running up. So, but it didn't give me any. But then I saw right here, it's literally like 2 points away from that target. And then it pulls back, right? It pulls back and it leaves this fair value gap right here, this bearish one. And there was one right here going up, but I didn't take it because we just created this 15-minute one. Here, let me get rid of this. Let me get rid of this. We just created this 15-minute one. And what I was looking at, we created it right here. So I was looking at it, I was like, okay, we got so close. Then we pulled back. You could look at this as a market structure shift right here. Took this low shift, left a fair value gap, pull up and go short there. That's not what I was doing because that's not what my framework aligned with. However, I did see it as, okay, it potentially could go short here and reach this 15-minute fair value gap. That's what could happen. I was like, but I don't think so. I think we're going to, because we got so close here, we got 1 point again to this 15-minute fair value gap. And we got so close, I was like, yeah, and then here's the high of the opening range right here. So I was like, yeah, there's no need for it to go down and actually touch it. So as soon as we started coming up, right here, let me do this. Since we started coming up, we left this little fair value gap and then one right here. So kind of like a double, but I'll get to that in a second. And then we rebalanced this one completely. So I was looking at that. Like if we leave this one here, I want to see this bearish fair value gap get rebalanced completely. And if it does, then when it pulls back to this, I'm going to go long. And I'm going to target either right here that I was going to target because it didn't quite get there. Or I could target this 0.5 deviation. Now, again, I went over how I draw my deviations on yesterday's trade recap for 421. It's just the low of the opening range, the high of the opening range, and then you set your deviations. And I'm telling you, they're so accurate. But anyway, so here's my mistake. Let's zoom in here. We pulled back, and I wanted to go long here around 273. And I was looking at this wick here to put my stop under. So basically, my stop at right about here. My entry here at that level, and my stop right here. That's about 31 points. So, excuse me. At 31 points, I can go at my normal contract sizing. That's about the max. I can go at my normal contract sizing and have my stop under here, no problem. Because you can see price pulled way back. And look at this wick right here. This looks to me like it would be a rejection block. And look how price went right to the midpoint of it. And then went. So what happened was we got this double gap. I was initially looking to enter here, but price was really hesitating to come back down. And I just knew it was going to go up, very confident. So I didn't want to miss the trade. So if I combine the two, when this happened here, look how price went right here and came up and closed here. So when price went here and started coming up, I'm like, yeah, it's about to take off and displace. So it came in here. Look at this. This low right here is 276. My entry was 280 right there. So I saw it. As soon as it came up here to 280, I said, all right, I'm in. But what did I tell you I wanted to get in at? About 273, which is down here. So that's now 7 points more than what I like to risk on my max sizing. So here's the lesson. What happened was I had my stop down here initially. And that would give me, if it loses, a little bit bigger of a loss than I like to normally accept. So when I enter a trade, I have my risk. My risk is set. I'm okay with risking if I take a full loss because it's there. It's my money management, right? But now I'm like, I didn't get in where I wanted to. So now I have more risk. So I'm like, I really don't want to take a loss. And then as you can see, it came back. It came down, way down into some nasty heat, right? But it's okay. That's why I have my stop here. I'm accepting price to come down this area. But now I have more size than what I would with a 40-point stop. A 40-point stop, I'm going to reduce this to 2, right? But I still had 4. That's my leader, 4 micros. And my followers are taking more than that. So then when this happened, and I'm like, crap, it created an inversion with this. That shouldn't happen. Like that should not happen. If this was going to go, price should have came down here and then displaced up. But it didn't. So whenever it did this, closed here, I'm like, I'm like, well, I'm going to lose already. I'm going to lose. And then look at this bar. This bar happened. And what happened? It came up and closed here. So now what is this? A reclaimed fair value gap. So now I told myself, all right, that happened. Price should not come back below this wick right here. If this is going to win, price should not come back below it. It should just displace up. So what did I do? Well, I put my stop right underneath that. Well, not over it, but underneath it. Underneath that little wick right there. All right. And as you can see, this next bar, what did it do? Took me out. But as you can see, and then it came all the way down here. But did it ever come back under there where my stop was? It did not. So had I left my stop there, this would have been fine, because look where price went. To my target. And that happens sometimes, right? Sometimes it'll overshoot. It's not ever going to always be perfect. Like, yeah, it should have came here and went up. That's what I expected. But it didn't. And that's why I have my stop here, because this is allowed before it goes. But because I was in a little too large, because of, like I said, getting in different, not where I wanted and the whole thing. So it created me with a little bit of like fear and tightening here to taking a 25. So then this is what I have to live with. Okay. Here's how I deal with it psychologically. Yes, it sucks to take a loser when it went to my target. But this is how I have to look at it. I was right. Right? My trade was wrong. Like, my trade lost. I lost. But my thinking, my analysis, everything was right. So I gotta lean on that and say, it's fine. I was right. And then just remember, I have to adjust my contract sizing according to my stops. Like, I have to put that on a sticky note now. That's twice in 1, 2, 3, 4. Two out of my last 4 trades. Two in both winning. So out of my last 4 trades, I'm 1 winner in 3 losses. Out of my last 4 trades. When really, I could be 3 winners and 1 loss for that simple, easy fix, right? So I got to lean on, okay, I was correct, right? I was correct. And then the other thing I got to lean on is, well, I took a little bit smaller of a loss, 25 points, than if I did leave it here, I would have taken a bigger loss. So 1 winner is going to make up 1.5 times this loss. However, if I did do the smart thing. And even though it won, I have to look at it this way. I did do the smart thing, because if I did leave it here and I took on a 40+ point loss, I would have had more to make up. So, it is what it is. But to keep my brain and myself from spiraling out of control, right? Then those are the things I have to look at. And that's what I encourage you to do in your trading, that when you have a moment, a loss or something where you're not happy, you have to find a couple positives and lean on them. Lean on them so you don't lose yourself and lose control. You have to do this, because like I said in the beginning of this video, I've seen way too many great people that truly deserve to be successful quit when they could have just kept going and actually been successful. So that was my trade. And like I said, I'm still up on the month. I'll do my monthly recap at the end of the month, because I don't want to do it in the middle or anything like that. First of all, I don't want to jinx myself on anything. But I just want to keep them once a month. So I am 50% on the month. I am profitable on the month because of my money management, even though it's been not the best month. So let's go into the video now. Okay, so here's the video. as always, my trade video. As you can see, I was waiting for this to rebalance. And look at that. Because there was a trade earlier I was considering taking back here, where if we did pull down to here, I was like, okay, from here to these lows, it was like a 40 plus point stop. So I reduced my sizing. If you look over here, reduced my contract sizing. And then so when this started coming up, I'm like, oh, I can go back to my normal sizing. And you'll see me adjust that back to 4. And then I ended up taking an entry higher than what I wanted. So you'll see me get there here in a second. So that's reclaimed. So I was thinking too, I was like, well, it might stay up here because that's reclaimed now. It may not pull back. But then I was like, no, I'm only going to take it if it comes down here. And I didn't think we were going to get this little fair value gap right here. So I was measuring. I was like, okay, cool. I can go to my normal sizing. So now pulls back. So I combine the two. And let's see. I want you to see my entry. Here we go. I want you to see this because you'll see me getting ready. It comes in and I'm like, well, I really wanted it to get down here, but then it looks like it's going to take off. So I enter. You'll see it. I'm like, ooh. I'm like, I might have missed it. Let's wait. Hold on. Let's see. And here we go. We're digging back in. And I'm like, okay, now it's going to go. So I get in. And look where I put my stop at that low. But the other thing I was kind of a little fearful of is price could retrace to this 15-minute fair value gap because it got so close here, a couple points, and it didn't hit it. So I was a little bit afraid when I was in that big time heat. I was a little bit afraid of it coming down, hitting my stop, hitting that fair value gap, and taking off. So it was just, I was like, man. So anyways, so let's fast forward. So there's my accounts, as you can see. Coming down. I want to get to that point where I move my stop. So at this point, I'm like, okay, this could be an order block right here. So I measured out the high, the open and the midpoint. I'm like, okay, we hit the midpoint of it. It could be an order block. Cool. And because of that, then we get this close up here. So now I'm like, yeah. Excuse me. Now it shouldn't come back down. So I'm going to tighten up there. Then it said, nope, you tightened your stop. Let's go ahead and knock you out. And there we go. It's fast. Back up a little bit. There we go. Came down. Took me out. Got about a little over $7,000 loss on that one. $7,200. Which that's great. That's 25 points. That's about where I want to be. Around $7,000 to $8,000 on a loss. Because my normal winners range around 15,000. So that's about close to 2 to 1. So I want to make, because of how my account balances are and everything right now, I want to make between 10 to 15 plus, and I want to lose, if I lose, between 5 to 8,000 roughly. That's pretty much how my money management is with all my accounts right now. So anyways, that's all. That's the trade. Lessons to be learned always. That's why you do this. Do your own chart review. Write stuff down. Notes. I have my electronic journal, trading journal with notes all over. Another one. I mean, I keep this all right here. And then another little one. I got so many notes, so many things I'm writing down. It's how you become successful. All right, I don't want to keep you. This was a longer one than normal. But I hope you got something out of it. So, all right, until next time, I'll see you later. Trade well, everybody.